This is CA Shrishti, and today let us go through some popular IPO launches in India to understand how each of them fared. Paytm, the pioneer of UPI payments, got listed at a price of Rs 2150 in November 2021. Wait. Let's rewind to the beginning. Founded in 2010 by Vijay Shekhar Sharma, Paytm revolutionized digital payments in India, from mobile recharges to bill payments and even banking services. In 2014, Paytm introduced its wallet system. By 2015, it had 100 million users, and by 2017, it became the first Indian payment app with over 100 million downloads. Investors like Alibaba's Ant Group, SoftBank, and Warren Buffett's Berkshire Hathaway poured money in driving its valuation to over $16 billion by 2019. Yes, you heard that right. Paytm was the first Indian venture to win over Warren Buffett. With such heavyweight backers, you'd expect a smooth ride, right? Wrong. In November 2021, Paytm launched its historic IPO through 197 Communications, aiming to raise Rs 18,300 crore. The stock debuted at Rs 2150 per share but plummeted by over 28% on first day. Despite its strong background, investors were skeptical about Paytm's profitability and sustainability. High valuations and market volatility added to the woes. By March 2022, Paytm stock had lost more than 75% of its value from the IPO price. The RBI's regulatory actions in early 2024 further battered the stock, causing a 36% decline in just 3 days. Major investors like SoftBank, Ant Group, and Berkshire Hathaway exited their stakes, eroding investors' confidence even further. As of August 5, Paytm's share price stands at Rs 500, a staggering 80% below its IPO price. So, what can we learn from Paytm's IPO? A strong brand and market presence are essential, but a sustainable business model must underpin them. Realistic valuations and managing market expectations are key to avoiding post-IPO disasters. Now, let's switch gears to a success story that's doubled investors' money in less than 1 year. Founded on April 21, 2006, this infrastructure company has become a powerhouse in India's port-related infrastructure sector. By 2023, it had grown to become the second largest commercial port operator in India. Yes, we are talking about JSW Infrastructure. JSW Infrastructure made a grand entry onto the stock exchanges on October 3, 2023, listing at a 20% premium to its issue price. The stock opened at Rs 143 against an issue price of Rs 119 and surged 32% to 157 rupees by midday. This also marked the first IPO from JSW Group in 13 years after JSW Energy, listed in 2010. It was a resounding success, with the offer being subscribed 37.37 times. Qualified institutional investors led the charge with a subscription of 57.09 times. So, what can we glean from JSW Infrastructure's IPO? Strong backing, strategic alignment with national growth priorities, and consistent performance are crucial. Even in promising sectors, navigating market conditions and regulatory landscapes are essential for sustained success. Lastly, let us cover Zomato, always flashing in news or buzzing in our notifications with yet another creative marketing campaign that never fails to tickle our bone. Recently released Q1 Financial Year 2025 shareholders letter and results highlighted the company's upward trajectory with a 62% year-on-year adjusted revenue growth and adjusted EBITDA of Rs 299 crores in comparison to Rs 194 crores of the last quarter. Let us rewind back to July 2021 when Zomato became the first online food aggregator to issue its IPO. Zomato's IPO was a highly anticipated event marking a new era for tech unicorn startup in India's internet market. The company filed for an IPO on April 28, 2021, seeking to raise $1.1 billion from issuing new shares. Zomato's IPO was backed by prominent investors including Info Edge and Ant Group, a subsidiary of Alibaba Group. The IPO was listed on both the Bombay Stock Exchange and the National Stock Exchange under the ticker symbol Zomato. The market tide was not entirely siding with Zomato owing to its negative earning and over-the-roof valuations. However, With fundamental developments, Zomato stands high as one of the most promising companies of India. The financials of Zomato from the last few years show improvement. For instance, the EBITDA margin over the years were minus 83.18% for financial year 20, minus 17.17% for financial year 21, minus 32.34% for financial year 22, minus 7.46% for financial year 23, and finally a positive 7.33% in financial year 24. Thus, a key takeaway for investors is to have a good understanding of a company's business model and a long-term vision. This is it for today's video. Happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.